Before we get to the clip, I would like to outline how progressives seek to hold financial institutions accountable for a variety of reasons, rooted in concerns about economic stability, fairness, and the well-being of individuals and communities. We are going to go over with detailed accounts of why progressives advocate for holding financial institutions accountable. Progressives believe that unregulated or poorly regulated financial institutions can pose systemic risks to the economy, leading to financial crises that harm millions of people. The 2008 financial crisis, triggered by risky lending practices and lack of oversight in the banking sector, underscored the importance of regulating financial institutions to prevent such disasters from recurring. Financial institutions have significant power and influence over consumers' financial lives, offering a range of products and services such as mortgages, credit cards, and loans. Progressives argue that without adequate oversight, financial institutions may engage in predatory or deceptive practices that exploit consumers, leading to financial hardship and insecurity for vulnerable individuals and communities. In the following clip is a good example of this. Following the clip will be more detailed accounts on progressives' positions.
So, Director Chopra, on March 28th, you gave a speech in which you focused on repeat offenders. Not the little guys, but the giant banks and corporations that repeatedly break the law even after regulators have imposed fines, consent orders, and lawsuits. Now, this is a really serious problem, and I want to talk today about one of the worst repeat offenders in our entire financial system, Wells Fargo. In 2016, Wells Fargo's fake account scandal was exposed. The company's leadership had squeezed their employees to create 3.5 million unauthorized bank accounts. Director Chopra, do you recall how much Wells Fargo was fined in 2016 for this fake account scandal?
I want to say it was $185 million.
That's right, including $100 million of that was from the CFPB. Now, that was a big fine, and CFPB and other regulators were right to impose it. But keep in mind that Wells Fargo booked more than $5 billion in profits that year. So maybe we shouldn't be surprised that a fine alone was not enough to persuade Wells Fargo to follow the law. Because over the next few months, the following scandals came to light. Wells forced consumers to buy unneeded car insurance. They changed information on customers' documents without authorization, and they illegally repossessed cars from service members. In 2018, the regulators finally said enough. And under then chair of the Federal Reserve, Janet Yellen's leadership, the Fed put a cap on Wells Fargo's growth. Now, that was pretty shocking at the time, but it still wasn't enough to get Wells to follow the law. Since that time, Wells has closed customers' accounts without authorization, damaging people's credit reports, and just to rub salt in the wound, continued to charge them overdraft fees even after those accounts were closed. Wells has also been fined by the SEC for recommending unsuitable products to mom and pop investors. It put up to 1,600 customers into forbearance without their consent. And just a few months ago, Wells was hit with another fine by the OCC and a new consent order because the bank is still screwing over consumers. It appears that cheating customers is simply in Wells Fargo's DNA. Director Chopra, the asset cap on Wells was a much-needed step, but it's clear we're dealing with the baddest of the bad here. What other steps should regulators consider to hold Wells Fargo and other corporations that break the law over and over, to hold them accountable?
Well, I don't want to comment on any specific case, but here's what I see. I see federal enforcers and regulators are very quick to lay the hammer down on small guys and small businesses. They will name people individually. They will ban them from certain business practices and often criminally refer them for prosecution. But there is a totally different standard for large firms who break the law over and over again. Yes, they do pay a fine, but often it is less than the profits that they made from the misconduct. We have to look at a broader array of remedies. In banking, the Federal Deposit Insurance Act talks about limitations on FDIC insurance. There's asset caps like we see that the Federal Reserve Board did or that the OCC has done. We have to look at structural remedies that stop the law breaking from continuing. Fines are not going to solve this with the biggest players. And frankly, I think if we care about equal justice, we should treat small firms and large firms the same.
I agree with you. Thank you. I think it's clear that fines have just become a cost of doing business for giant corporations like Wells, and we can put a stop to that. The Fed has the power to break Wells Fargo up, and they should use it. And in addition, I'm reintroducing my Corporate Executive Accountability Act to hold big bank executives personally liable when the companies they run repeatedly break the law. Look, we're not going to get any changes in corporate America unless we change the rules for repeat offenders and their CEOs. And I appreciate your leadership on this, Director Chopra, and I look forward to working together with you. I also would like to address the comments from my Republican colleagues who have accused Director Chopra of a, quote, hostile takeover of the FDIC, a coup, and a lawless overreach. They can call it whatever they want, but here are the facts. The previous FDIC chair acted in violation of the FDIC's bylaws to block the committee's majority and she chose to resign when it became clear that she didn't have a leg to stand on. We need regulators who are going to follow the law and who are going to use their authority to safeguard the financial system. And I'm glad that we have that kind of regulator now. Thank you.
Progressives advocate for a fair and equitable financial system that serves the interests of all stakeholders, not just the wealthy and powerful. They argue that without proper regulation, financial institutions may prioritize profits over people, engaging in practices that exacerbate economic inequality and widen the gap between the rich and the poor. Progressives recognize that financial institutions have played a significant role in perpetuating systemic racism and economic disparities. Historically discriminatory lending practices, such as redlining, have denied communities of color access to affordable housing and credit, contributing to wealth disparities that persist today. Holding financial institutions accountable means addressing these inequities and promoting financial inclusion and justice for all communities. Progressives are concerned about the concentration of wealth and power in the hands of large financial institutions and corporations. They argue that without regulation and accountability, financial institutions may prioritize short-term profits and shareholder interests over the long-term well-being of society, leading to economic instability and social harm. The 2008 financial crisis and subsequent scandals involving financial institutions have eroded public trusts in the financial system. Progressives believe that holding financial institutions accountable is essential for restoring public confidence and ensuring the integrity and stability of the financial system. Progressives advocate for greater transparency and oversight of financial institutions to ensure that they operate in a responsible and ethical manner. This includes measures such as requiring disclosure of financial activities, strengthening regulatory agencies, enforcement powers, and holding executives accountable for wrongdoing. Progressives believe that a well-regulated financial system can foster innovation and competition, benefiting consumers and the economy as a whole. By holding financial institutions accountable, progressives seek to create a level playing field that encourages responsible innovation and prevents anti-competitive practices that stifle competition and harm consumers. Well, I hope you like the video and subscribe to the channel. I hope you check out my other channel Concise Chomsky, which you can find a link on the home page. Now, take care and bye-bye.